Good morning, everyone. Jen Tozer, your portfolio manager here. Not to talk about what happened last night at the Oscars, but to talk about the other big news, which was Silicon Valley Bank had a run on it on Friday and is being run by the government Monday morning. So let's talk about what happened, what it means to us, and let's start with what does a bank actually do? So in its simplistic form, what a bank does is it takes deposits, puts them through a formula, lends out the money, and makes profit on the spread. So what that means is that we charge more on the loans than we pay on the deposits. Pretty simple. Now, Silicon Valley Bank is a big bank. I mean, it was 16th in the country, it has 40,000 depositors. So how come there was a run on the bank? Well, it was a niche bank. It was sort of like a country club. If you were kind of a who's who in Silicon Valley and you were going to do a private startup, that's where you went, and that's where you invested your money, and that's where you made your deposits. And a lot of those people knew each other. And because they were in similar types of businesses, in the similar geography, they had similar exposure to the business cycle. And when they, although it was done independently, at similar times they came to the same conclusion, which was there might be some tough times ahead in the private tech sector, and they started taking their deposits out. And when they did it at the same time, even though it wasn't coordinated, that's what created the run on the bank. Now, should this Fed step in? I sure think they should. You betcha they should have. Because if you're going to let the institution use the word bank in addition to regulation, that implies standards and oversight. And as a depositor, if you're a US bank, that word should give you some comfort that you can deal there. Now let's step back and talk about what this means to us. I know that as soon as you hear US bank failure, immediately all of our minds go to 2008 and what that spillover was in the market. Well, let's talk back to this bank for a second. So in this bank, this was a specialty US bank, okay? And what did they own? They basically, by their nature, invested in high-risk niche things, tech startups. What was it like in 2008? What was behind the banks? What caused the problems? It was the US housing sector. So basically the direct opposite, something that most Americans were exposed to in every geography. So I don't think we're going to see that kind of spill off. On a smaller note, we don't own SVB, so that's not a problem. What's it mean to the sector? If you own specialty banks, if you are a specialty bank, I think you're going to see some pressure on your deposits because people are going to be concerned that there may not be the support behind your specialty. So expect some volatility in the short term at least. What's it going to mean on the market? Well, again, I don't think we're going to see that huge spill off into the market. And there is a silver lining because if you're a large institution, I think you might be able to attract some of these deposits that were previously at these niche banks. And those are the types of investments we do own. So I hope that answers all your questions. Give me a call anytime. We're here. We'd love to talk to you. Have a good day.